Yeah! Turn me up! Turn me up! All right. Good enough. Hey, guten Morgen. Yeah, I can't remember what's Russian for hello. I have Spagoni Noche, but that, of course that's good night. Is it privet? Privet? Something like that? I can't remember. Anyways, good morning. How are you? My name is Wayne, and this is Forex.Today, the YouTube channel of more than 21,000. I don't read Cyrillic. More than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. All right, so nice to see you. I was away for a little bit, swimming with the feces. All right, I guess we should log into traders.com so we can do some technical and fundamental analysis. My name is Wayne, and I've written a book. It was pretty good. Speaker of the Year at FX Street, way back 2016. Been working with them for 20 years. Working with a publicly traded ETF, managed charitable endowments. I have 2 degrees from Harvard. Yep. Worked at NASA, Cisco Systems when it was a tiny startup. Worked with Apple Computers when it was a tiny startup. Yep. Other than that, life has been boring. Hey, wait. First, yeah, that's right. Well, actually, when I worked at NASA, they were working on the Martian rovers. And so I saw the Martian rovers before they went to Mars. Yeah. So anyways, cool. Right on. So it's nice to be your colleague. Thank you for allowing me to be your economist on your trading team. Let's log in and get an update on the news. Gold price declines toward $3,200 as markets assess trade war headlines. U.S. stocks likely to see initial strength on tech tariff exemptions. Euro-US dollar remains firm on mounting U.S. stagflation risks. Suspect in arson attack on Pennsylvania governor's residence charged with attempted murder. Euro-US dollar price forecast, higher high still on the table.
OPEC lowers its demand growth forecast this year.
Wall Street set to open positive.
Canada wholesale sales, MOM, below forecasts, 0.4% in February. Actual, 0.3%. Canada February wholesale trade, plus 0.3% versus plus 0.4% expected.
WH Economic Advisor Hassett making enormous progress on tariff talks with EU. Cool. And by the way, if you're not a subscriber to traders.com, I don't know why, but if you're not, did you know there's a free version of this squawk? Let me get that for you. youtube.com/@TRADARS. Let me give you the link. Okay. This is the free version. Why do I make it free? Because I want to help. Most people pay $200 a month for something like this. I just got billed $300 just for the voices in the last few weeks. So I'm paying thousands of dollars a year, and I give it to you for free. Right on. So go ahead and use it. Make sure you like and subscribe. Let's see what's on the calendar today. Nothing. RBA meeting minutes later in the week. Let's filter this out, not just by importance, but by volatility and repeatable patterns inside vol. So tomorrow, UK unemployment, great. The German ZU, Canadian CPI, UK CPI, United States retail sales, Bank of Canada interest rate decision. Holy smokes, right? European interest rate decision, Japanese inflation, German IFO, durable goods, UK retail sales. Pretty decent week. Now you're like, Wayne, that's not all the news on the calendar. No, I never said it was. These are the things on the calendar this week that produce volatility and produce a reliable, repeatable pattern inside of the volatility. So like German IFO, we can look at multiple time frames and differentiate if it comes out less than expected or greater than expected. And I can tell you if it comes out greater than expected, there's no scalp on Kiwi dollar. But there is on euro dollar. Really? Yeah. So anyway, so we have all that data, easy peasy lemon squeezy YouTube. Okay, if you don't have that data, then maybe you want to become a subscriber. We do the scalping, we do the volatility. Yeah. So you can see here, Mondays are good days to trade EuroCAD. And the last 2 or 3 hours are usually pretty good trading hours for EuroCAD on Mondays, although that doesn't seem to be an amazing move, but whatever. So for those that like to trade gold, Monday's a good day. Tuesday's not good. Wednesday's mediocre. But if you could buy a dip on Tuesday, Wednesday, Thursday might produce something, right? But anyways, this time of day is what we're looking at. So gold, okay, gold, you have to decide if you're a bull, you buy low. If you're a bear, you sell high. What you're trying to do is line this up at the right time of day. But once again, everybody at TRADARS has that, no big deal. The other thing that we do, see, I've been away. I went to the Caribbean. Yeah, I went to the Caribbean. Showed off my belly button tattoo. And cool. So while I was gone, I read hundreds of articles. Well, that's not quite true. I had AI read hundreds of articles while I was gone. Like gold, for example, just in the last 7 days, there have been 96 articles on 5 different websites that we track. And here is the sum of the whole over the last 30 days, but over the last 7 days, we're right around here, around 40. We're averaging pretty positive outlook for gold. Does it matter? Well, these articles are written by the media. The media says up. Doesn't matter if it's fake news or real news. This is what's being written about gold. Cool. Maybe it impacts the direction. Yeah, maybe. So anyways, that's a nice little tool to have AI read and understand all these articles and then aggregate them and then be able to go back into history and find out how things have changed in the sentiment. That's really nice, isn't it? Oh, it's very nice. I've already gone through all of this, so I'm just going to go through this main page, just to give you an update. But we covered this hours ago at traders.com. So here it is, the stock market's about to open. You should already be in your trades, bro. Or you're waiting to scalp the open. But anyways, Bitcoin is up. Great, back over 85. A couple hours ago, it was like 84 something. Now it's 85 something. So that's doing all right. Gold is slightly bearish. Okay, so we'll see. The stock market's about to open. Gold well over 3,200. We'll see if it's going to have another update. Oil up and treasuries down. So that's pretty decently risk on. And on just when we look at what's happened so far today, we're printing a 4. The things that you should be looking at for buying: euro dollar, pound dollar, Aussie dollar, euro Aussie, and Kiwi dollar. Things you should probably be bearish on: platinum, oil, USD Swiss franc, USD yen, USD CAD. So when I look at these together, it looks like the dollar index is weak. Oh! But not just, this is what's happened so far today. Okay? But when you look at the aggregate, this is looking at things like jobs and GDP and inflation and seasonality. And it says, according to all these things, the US dollar should be weak. It's not that it is weak or it has been weak. That's only a small part. You see this trend reading? This is showing you the direction that the charts are actually pointing. It's not technical analysis, it's statistical analysis. So statistically, the trend is very bullish or very bearish, which is the slope of the mean, right? So if the slope is flat-ish, but directional, you'll get a 1. If it's steep, okay, then you'll get a 2 or -2. Great. So this just happens to be what is happening on your chart. This is what should be happening, what is normal this time of year. The numbers, this is only 3 out of 10, 3 out of 9, okay, 3 out of 7. What are the other numbers? And that's the macroeconomics. And it just happens to be dollars weak. And it's right as rain, totally normal. So it's really nice to have all this. Here's a scatter plot. Cool. Hey, by the way, I haven't made an official announcement, but TRADARS has a rebate program now, traders.com, and a prop trading team. Isn't that neat? My goal is to help you trade like you're an institutional trader, a small retail institutional trader, and for us to at least cover the cost, meaning I want TRADARS to be free for you. I want everybody to have this information and data when they trade. I want everybody. So we have a rebate program and we have a prop fund now to help with that. Isn't that cool? It's not on the website yet. Well, it's here, but not, you have to be logged in. So only members know about this. So I have to update the website and all that kind of stuff. And I went through the sign up process. It's a little clunky, so I got to smooth that out. There's technical challenges. So, hey, it ain't perfect yet, but it works. It works. I have meetings set up to follow up to make sure people get their prop funding, but the program does work. And I will be issuing our first rebates on May 1st. Yeah. Yeah. So it's happening. It's happening. It's real. One of the things that we covered today was the Commitment of Traders report. I hope you've already done it. Look at the capital stock and the capital flow. Once again, I've already done this a couple of hours ago, so you should be well informed. This data came out from the Commodity Futures Trading Commission on Friday. I also have an email program that emails you this. So I'm assuming like the stock market's about to open on Monday. You should have done this earlier today. You should have done it Sunday. You probably could have done it Saturday. You could have done this on Friday. If you haven't done it by now, you're still making amateur decisions. And that's not a bitch slap, by the way. That's that. If you haven't done it, you're just not doing the work. That's that. Like, it's matter of fact, isn't it? Yeah. You're like, oh, I don't track institutional positioning and capital flows, Wayne. Really? Why not? Dude, there's some assets that we covered this morning that have had huge moves in the last week. But I can show you nobody actually was a buyer. Now, you're like, Wayne, how could that possibly be? Well, there you lack knowledge. Not only do you not know how, you don't know that that's happening, which is really cool. So there are assets that are going up in value, and I can prove to you nobody is buying it, not institutionally. And something else is happening in the market. So it may be going up, but should you be confident in it? Should you be aggressively bullish because there's green candles? Or should you be cautiously bullish because the green candles may not last because nobody's actually buying it? How could it possibly be bullish if nobody's buying it? Well, It's good to know these things. Welcome to Illuminati. Veritas. Huh? The truth through knowledge. So this is what we're looking at here, and this is retail positioning and institutional positioning. Isn't that lovely? Isn't that lovely? With your smile so worn and your teeth so green. Yeah. Gorgeous. Yeah. Gorgeous. La da 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 da. Da 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 da. So you could do things like get rid of that, get rid of that. Well, let's get rid of everything except cat. Do 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 do. Do 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 do. Ah, it did everything. Okay, cat, 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 cat. Is it putting everything back? I don't want everything. Only. All right. Institutions are 90% short CAD. USD CAD is 50-50. Kiwi CAD, check that out, dude. 71% long CAD. 71% long CAD. And institutions are 90% short CAD. How about pound CAD? Pound CAD, 62% long CAD. Euro CAD, 64% long CAD. Okay. All right. That makes sense, right? No, look at this 57% long CAD. This is retail positioning, guys. 75% long CAD. 56% long CAD. Retail traders are long CAD. Institutional, 90% of institutional investors are short CAD. Ha ha ha! Retail's going the wrong way, brother. Brothers and sisters, pump up the volume. Chicka, chicka, chicka. Yeah. So anyways, sucks to be retail. Anyways, cool, 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 cool. You know what we did on Sunday is we downloaded and read all the economic news last week. We call it Week on the Street. We do it Sundays now. No, Stingray, because they're not trading it to make money. And we're trying to do capital flow. Okay? So Emerald says, hey, I'm looking at USD CAD. Well, based on the institutional positioning of a week ago, so it's the newest data, but it is pre-tariff, right? But anyways, what this is suggesting, Emerald, is not that you're wrong. So let's say USD CAD technically looks great. Okay, technically it might be great. What this is suggesting is based on institutional positioning, you might be able to find a similar trade with better probabilities. Okay? So it's like you're in Vegas and you're trying to find a blackjack table to play. And one table has 3 decks of cards that it's dealing from, and the other one has 1 deck of cards. The rules are the same. But you're like, hey, well, if I play the table with only 1 deck at a time, then I can calculate based on what I've seen how the likelihood of how many face cards there are. But if so it's like, okay, so let's say the rules of technical analysis are generally the same. Like the game of blackjack is the same on every blackjack table, but the odds are different based on the deck, 1 deck or 3 decks, right? So in this case, what I'm saying is you might be better off USD Rand short than USD CAD short, even though the USD CAD may work out fine. Logically, but you might do better Rand. You might do better on gold, because remember, it's not just XAU, it's XAU priced in USD. So if you're going to short dollar, you could long gold, and you might be better off than CAD. So again, pound, you might be better off. Euro, okay, euro dollar long, you might be better off. So let's say if you make 50 pips on a USD CAD short, you might make 75 pips on a euro dollar long. It's basically the same trade, but more favorable outcome, let's say, based on what we know. See, the thing is, nobody knows the future. This is just a snapshot of the past. And what we're supposed to do is be able to make, it's not judgment calls, but sort of be able to analyze the best, most favorable probabilities of the outcome. It doesn't prevent you from being wrong, but if there's only 1 deck of cards, and every card you've seen so far on the table are low cards, 2s and 3s and 4s and 5s, the probability is there's lots of face cards in that deck, or the face cards have been dealt to the other players, and so now you can make decisions. You still don't know what the next card's going to be, but you're making better decisions on the probability. Now, how to play it is up to you. Right? So let's say you have high cards in your hand, 2 high cards, 2 face cards, and so 2s and 3s and 4s and 5s are no good to you. You need an ace. All of a sudden you're like, there's a lot, you're running out of, anyways, whatever. I think I've taken it too far. But the thing is, you should be able to calculate your probabilities, and you need to decide, are you buying the Canadian dollar? Is that what your USD CAD is? Why would you be buying the Canadian dollar? You're like, it can't fall any further, so I'm going to buy it. Okay, well, that's, I don't understand that logic. It doesn't really make sense to me. Well, you're like, well, I'm selling the USD. Okay, that makes more sense to me. So therefore, I would say if you're selling USD, you might be able to find something better to buy than CAD, because you couldn't get something worse to buy than CAD. As far as institutional positioning is concerned, though, the biggest dog with the most amount of fleas is the CAD, and you're buying it. It doesn't make any sense. Even if you make money, even if it's the best trade of the day. Okay? When you're holding two kings, you don't tell the dealer to hit. That's just how you play the game. So in this case, I don't disagree with selling dollar today, but to buy the CAD, that doesn't make any sense to me. Even if you make money, it doesn't make any sense. If you hit with two kings and you get an ace, I don't care. It was a bad call. So that's where I'm getting you to. Like, I don't know the future, but at least I have the data. And therefore, we can make the best, we can trade with the best probable outcome. So I don't know if you get insurance on two kings. I don't know if you do a split. Okay, now we're getting too far into the game of blackjack. But, okay, I want you to know the truth of the way the market is positioned. This is the truth. And I want you to then make decisions because you have better data than your competitors. This is a competitive market. You compete with somebody else on every trade. And I want you to have the better odds because your trade is smarter. Okay? And for that, you need to start with things like fundamentals. Like, this is factual. Okay? According to the Commodity Futures Trading Commission, okay, this is how the market is positioned. Okay? That's right, Anthony, right? Like, see the possibilities, trade the probabilities. Because here's the thing. In situations, if you lose money, you want it to be unusual. So therefore, you usually do well because you're trading logic. You're trading quantitatively, mathematically. You're trading what other people are trading. You're going with the flow, not against the flow. You're trading with the trend, not against the trend. And yes, there's an ebb and flow to all of this, but I need you to know the facts. Otherwise, you're just, I don't know, trading MACD crosses or something. Okay, I have no problem trading MACD crosses, but I want you to start your logic first. Okay, like for example, in the first 5 seconds of logging in, you should put these things on your hit list. So like whoever was selling USD CAD, okay, great. There's nothing wrong with that. USD CAD, it's bearish. It's technically bearish, and it is usually bearish. Great. But these are better. Quantitatively, you have a slight edge of going long euro dollar, long pound dollar, and the odds are the same with the Aussie dollar versus USD. Cool. So a similar trade would be long Aussie USD. Cool. But a better trade would be euro dollar, pound dollar. Just quantitative analysis of macroeconomic data. So you will probably do better. But as far as the positioning, you might want to say, well, okay, Aussie and CAD are about the same versus dollar. But what about, right? What about in the positioning? I'd give the slight edge to Aussie because only 76% of institutions are short Aussie. 90% are short the dollar, the Canadian dollar. So really, neither of them are great. What about euro? Okay. 60% of institutions are long euro. You're way better off based on probability. Okay. And then you can check the change in flow week over week. See, this is what we just reviewed on the other chart. But now you can say, ooh, well, what about the flow of euro? Okay. Euro, modest. Aussie did have a better week, didn't it? No. We're like, well, it changed 3 point, 3.25% versus basically 1% on euro. What's the difference? People actually bought euro. Check this out. You ready? Wait for it. The reason Aussie went up is 10,000 people stopped selling it. They didn't buy it. They stopped selling it. Ha! 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 Oh! Whoa! But they're not buying. Oh, good to know. Oh, for show. Oh, faux show. See how much knowledge you can have? So, what do you want to do today? Okay. Okay. So that's what I just showed you, Lewis. By the way, USD CAD is aligned. You remember when it shows CAD, it's CAD, not USD CAD. You have to look at USD and CAD. Retail shows USD CAD because we can get USD CAD positioning from our liquidity partners. So I can see, based on all the retail traders going through the liquidity partners, what direction they're trading USD CAD. When it comes to the COT data, that comes from the futures exchange, and you have to look at futures contracts for dollar and futures contracts for Canadian dollar, and then you have to then combine them. But when you see nobody on the planet is buying CAD, then I don't really care if USD CAD looks technically bearish. Nobody wants to buy it. So I don't believe in the USD CAD continuing to trend down. The US dollar might be weak. Oh, for sure. But I have no belief in the Canadian dollar continuing to be strong. And I'm probably going to be better selling USD versus the euro or the pound, because I know hedge funds are going to buy it and take my position higher. Cool. So that's what I'm trying to get to. So, like, for example, let's only look at USD, and let's just say we're most interested, or only interested. How about that? We're only interested in selling the United States dollar. Now, that's risk on, by the way. That's risk on. So I'm betting, right? I'm essentially looking for the stock market to go up. I'm looking for the economic conditions to improve. So under these rules of engagement now, I only want to sell dollar. Cool. So USD yen may be up. Do I want to buy it? No, I only want to sell it. Pass. Pass. How about this one? Looks like maybe a break of this channel. Do I want to sell Kiwi dollar? No. Pass. USD Mexican peso. Yeah, well, you're already an hour late and you've kind of already missed it. But notice that leg was down. So really, I want a lower high, lower low, get us closer to 20. Okay, Aussie dollar. I only want this to go up. The current leg is down. Great. So when we get closer to 63, which is actually 62.80, I'm interested in going long and strong. The channel is up. That's bullish. The leg is down. That's a threat, but I'm waiting for the opportunity. So I should have my charts open already, looking for an opportunity. Aussie CAD. Now, I'm not in love with the Aussie, but it is a bullish pattern with maybe potentially a bullish leg. Okay? So it's a maybe. I prefer something better. Okay? Now, if it breaks, then you want to sell a lower high, but I don't want to sell. So notice what this says. It doesn't say down. It says if it's down, then the pattern is broken. Sorry. There you go. Okay? So if that happens, then I have to be aware of that. Has that happened? No. So the way I want to look at it is I'm a bull. Okay? So you still have to do your job, guys. Now, I meant to make that green. Let me try it again. Okay? So that would be my plan. But again, I'm not in love with the Aussie. So I'm like, yeah, okay, maybe. How about Euro? Whoa. Consolidation. So if it breaks, then this is a threat. Triangle breakout. What direction is this pattern? Non-directional. Oh, all right. So wait. Let it do a trap and break. So I'm going to wait. So what does it say now? Not now is what it says now. Here's your USD CAD. And it looks like up. This down channel might be under threat. Pass. Okay. Kiwi dollar, not in love with Kiwi, but it's a big, fat, giant, 100% maybe. Okay. What do we know about this pattern on the 30-minute? It's bullish. That's a bullish pattern. And we want this to go up. So I have permission. The second thing is the current leg is down. Down. Cool. And I'm a bull. So what do bulls do? They buy low. Cool. So that's a big, giant, fat maybe. Pound, bullish and aggressive. Go. And that just shows you this is exactly what we're talking about. Okay? We looked at it. Institutional positioning is much longer for pound than it is Kiwi and CAD and Aussie. And this is bullish and aggressive. This is a much better trade. Okay? Kiwi dollar showing like if this breaks, then we want to buy a dip. This is a daily chart. So maybe later in the week we buy and hold. Is that good? Yeah, I might be in that 2 weeks. USD Mexican peso, we want this down. It's a down channel. That's good. The leg, 14 hours ago, TRADARS said, hey, look to sell this sucker. Nice. Now, it says we're going to struggle around 20, and we saw that on another pattern. But on the daily chart, this is a maybe position trade. Check your seasonality. I don't think we have it on peso, though. But technically, look at your annual and monthly pivot points. Okay? And I do know hedge funds are aggressively trading it, including one of my buddies is heavily trading it. And by heavily, I mean billions. Yeah. I think he did 3 billion last month. Yeah. Good for him, huh? Yeah. All right, USD yen. Okay, we want to sell this. So, do we want to buy yen? I'm okay with it. But right now, it's a bearish channel, so that's great. So we want to sell. What are the different opportunities? Well, this is a role reversal. That's one opportunity. Okay. This is a bearish trend line. That's the second opportunity. Okay. And then watch the moving average, but it's basically the same as the role reversal. So what's the potential here? The potential is, okay, up and down. Okay. That's on a 4-hour chart. Put it on your to-do list. Now you know what to look at today. By the way, are you guys loving this? This is how you're supposed to trade, with logic and intelligence. TRADARS will remove all the randomness from your trades. Every trade you make will be logical and intelligent. Or you can just randomly trade what you like and based on how you feel. I just love the Canadian dollar today. Good. You're on your own, bro. You're on your own. So we have a big move here. If you had to trade it, how would you trade this? Okay. Here and here. Okay, this is a daily chart. Okay. Yeah. There's already been crazy vol around that. So, okay. Oh, what about gold? All right, Lucky, let's see how easy that is. Okay. Okay, let's do this in order. What about gold, baby? What about you and me? All right. What about gold? Let's solve this riddle. Okay. We're bullish. Okay. We're less bullish than we used to be. I can see that here. But we are indeed bullish. The market is heavily long gold. Seasonally, we are long gold. Technically, we are long gold. So we are going to buy gold or not buy gold. Cool. Let's have the machines analyze the gold market for us. Technically. Okay. We only want to buy gold. There's no opportunity right now. Not on a 15-minute chart, not on a 30-minute chart, not on an hourly chart, not on a 4-hour chart, and not on a daily chart. Now, that's not true. There's just no trend pattern. So let's turn on all the patterns. Okay, there's one pattern. Okay, so what I would do if I were me is on the daily chart. Okay, looks like we're going to go to 3,300, drop down to 3,200, and that would be a buy, but that's probably later in the week. Done, Lucky. I'm done. Just like that. I don't have to look at the other charts at all because we're looking at the most reliable, repeatable patterns that technical analysis produces. Now, maybe you drop under the 1-minute chart and skippity scalp. Well, then that's just price action. You don't need technical analysis for that. That's just simple price action. But I would suggest using technical analysis, this ABCD Fibonacci pattern, is that when we approach 3,300 and we're almost there already, the move may be over. So there may not be a lot of meat on that bone. Maybe you get a couple of hours of trading, but then what we know is that you should probably walk away, or at least consider scalping down at that point from 3,300 back down to 3,200. Oh, maybe even 3,150. Good to know, right? Yeah. So here's that rebate program I told you about. Here's our prop fund I told you about. It's gorgeous. Okay. Yeah. And the cool thing about the prop fund is you keep 100% of the profits. Oh, and you're going to earn a rebate. So ideally, being a member of TRADARS and being a member of the TRADARS prop team is totally free. That's my goal. I want you to trade logically, with intelligence, with me on your team every day and others that support your growth. I want you to be a sustainable, small trading institutional business. And I want you to make money. Simple enough, right? Yeah. So I hope you share my vision. Okay? I hope you share my vision. It's that simple. I want you to trade like you are a sustainable, small institutional firm. I want you to have technicals. I want you to have fundamentals. I want you to have a performance coaching team. I want this to be free, and I want you to have funding. Okay? Cool. So hopefully we continue with some risk on and not the end of the world kind of stuff. I will see you tomorrow. Hope you have a wonderful trading day, and don't forget the free squawk for those that are not members. I don't have that link anymore. Is it still running? Oh, I do. Yeah, please use the free squawk. It's free. Cost me a lot of money. Cost me a lot of money. Cost me a lot of money to build it. Cost me a lot of money to maintain it. So please use it. I don't even delay it. The delay has to do with the basic latency of YouTube. So if you want super ultra real time, oh, that's available to everybody at tradars.com. Cool. Peace on earth. May the pips be with you. May your profits be above average. Have a wonderful trading day. I'll see you soon.